If you're interested in trading or investing, it's always good to remember the golden rule. Whoever has the gold makes the rules. Now, if you want to trade gold, or if you're looking for a long-term investment in gold, and you want to make your own rules, you're going to love today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart of the world-leading gold company Newmont Corporation, symbol NEM on the New York Stock Exchange. And when we take a look at the chart, we're simply going to be considering three things. What is the direction of the trend? Are there support resistance levels we can use to construct a quick bounce trade or a lower entry price for a longer-term investment? And the third thing I'm going to discuss today is the concept of a cup and handle. And I learned this formation from the great late investor and entrepreneur William O'Neill, the founder of Investors Business Daily. And the way he taught the cup and handle was something like this. You start at a peak to the left, drop down, and then rise back up to a similar peak, forming a cup, drop back down, head back up to the prior peak, and you have something that looks like a cup and a handle. So that's the cup and handle formation, and the game plan of back in the day, the 90s, was for when you see a cup and handle, you'd be looking for a breakout to all-time highs. Now, what we're going to do is, since we have the right part of the handle, the peak of the right part of the handle, below the left peak of the cup, we have to break out above that point before we think about entering. So I'm going to construct a trade here using the next two considerations, which are the direction of the trend and simply looking for support levels, for pullbacks. So instead of going for a breakout trade, we look for a pullback bounce trade. A little bit different strategy here, okay? So what we're going to do is look for, first of all, we'll assess the trend, and simply we're going to connect we're going to assess the two most recent highs and the two most recent lows. So from high to low, low to high, then high to low, you'll notice as they're moving from left to right, the highs are moving higher. As they're moving from left to right, the lows are also moving higher. That's the definition of an uptrend. And just on Friday, Newmont entered into a new uptrend, okay? So now that we know we're in an uptrend, we're simply going to look for support levels to think about a bounce trade or a lower entry price for a longer-term investment. And there is a support level right here in the 53.67 to 51.90 price range. There's another support level just below that in the 50.08 to 48.31 price range. Okay, so two support levels to consider for either a quick bounce trade or a lower entry price for a long-term investment. Now, before we move forward, let's go look to see if there's technical resistance in the chart. And this part gets a little challenging, quite frankly, because there is a resistance level right here. And if you notice, the closing price on Friday was right in the middle of that resistance level. So when you're in a resistance level, you generally have to assume that there are more sellers that want to sell more shares in that price range. And that could send the price back down before heading higher. It could chop and go sideways before breaking through it. Could just kind of chew through those sell orders and then break right through it. Or the sellers could knock it back down. So we're not going to assume that it's going to move right through it. Now, and we're going to be a little more disciplined with our entry. And our disciplined entry would be considering a pullback into one of these support levels. So let's go test the reward to risk potential of each one of these levels before we decide if we want to take either one of these, right? We're not committing to either one of these, but we're just going to assess them first for reward to risk. So the first one, if you place a buy limit order at 53.67, protective stop just below 51.90, drag your target just in front of the resistance level that you found, and that trade right there would have a 2-to-1 reward to risk ratio, okay? Ideally, we look for more than 2-to-1 reward to risk, but if your win rate is at least 50% and your average gain is twice your average loss reward to risk ratio, then you can go for a 2-to-1 reward to risk. So I'm going to keep that one on there for viewers to consider. And before moving forward, to go assess the lower support level for reward to risk. So with a buy limit order at 50.08, protective stop just below 48.31, target in the same place right in front of the resistance level, that trade setup would have about a 3.66 to 1 reward to risk ratio. So almost double the reward potential relative to the risk you would take for this trade if you're to wait for a pullback if it were to occur to the 50.08 price range. Okay, so if you wanted to go for the aggressive entry, the one that's closer in the 53.67, ideally you'd want the trade to play out something like this. You'd want to pull back to that support level, to bounce off that level, and then just come back up and retest the resistance level we're currently in. If you are looking for a greater discount in price, a little bit more like Warren Buffett, you're looking for a greater merchandise markdown on this gold miner, then you would be hoping for a pullback that looked something a little bit more like this. A more dramatic pullback to the 50.08 price point, or that general range, somewhere in that range, and then bounce off that level and go retest the same resistance level. Okay, so there are two potential trades to consider for Newmont Corporation. One has a little over 2 to 1 reward to risk. One has a little over 3.5 to 1 reward to risk. So let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week for more technical analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.